When I first started trading, summers used to be fairly slow. Now they can be fairly active. You see the last two summers in the 50K portfolio are very strong. Of course, last year was a pandemic, but 39K last year. Past performance is an indicative of future results. 2019 was kind of a lower volatility year, up 21K. 2018 plus 13K. But if you look at June and July, some really strong performers. Seasonality doesn't always repeat itself, but that's one of the things I'm looking at. Also, the current portfolio as of yesterday, May 26, is in a 2190 drawdown, and so it's at a pretty good starting point. Waiting for a 3K drawdown. 3 to 5K drawdown is ideal, but we're coming into the end of the month, and oftentimes starting a portfolio at the end of the month when it's in a drawdown can do well, especially if the markets have been fairly choppy as the month closes. And so I wanted to share that seasonality with you with the 50K portfolio. Also exists in some of the other portfolios. For example, the 200K portfolio. And so you take a look at the 200K portfolio, how well it has done June through August of last year, up 78K. I don't expect it to be that volatile. 48K in 2019. 56K in 2018, 2017, 43K. 2017 was one of the lowest volatility years we've ever seen. So if you're looking at low volatility, you're looking at 2017 and 2019. So 43 to 48K, and then high volatility in 2018. 56K and 78K. So those are just the last 4 years. You can even go back to 2016 and you see 46K, 2015, just 13K. That's still a good. That's May. Let me click June through August. 2015 is 29K. So still good performance historically. Overall, these have all good years, and I like the portfolio year-round. And I'm just looking at some seasonal cycles of when to start. This portfolio is just in a $125 drawdown as of yesterday. It's in a little bit more of a drawdown today. And so wanted to share the seasonality of these portfolios and how to start a portfolio in a drawdown at the end of the month, going into a good seasonal period. You see that we're currently in May, and May is about to end, and it's been a slower, May is a slower than average time period over the last 4 years, and so consistent with previous years. If you look back at 2018, 2019, 2020, those were down years, and so consistent with that, and so will we get these positive months like we did in those previous years. It could be the case we just manage our risk. We start in a drawdown and we manage our risk with that max drawdown or a multiple of that.